Hi everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, July 15th, 2019, and we are again in the final hour of the trading day. As many of you know, I believe that the prices as close as you can get them to the close of the market are the most valid prices of the day. That's when the large financial institutions and the hedge funds and the market makers come in and, in my opinion, move the prices around to where they really should be for the day, and therefore, being that they're the most, in my opinion, that they're the most valid prices of the day, those are the prices that I want to make my buying and selling decisions from. So anyway, I hope everyone's doing well out there and had a good weekend. All right, I was just going to ask if you guys could let me know that you could hear me, but I think you can. Hi, Mount Doji. How you doing? Thank you for coming by as always, and hope you had a good weekend. William, hey my friend, how you doing, William? Good to see you. Thank you for coming by. I appreciate it. All right, well, we're having a pretty flat day today. Pretty tight ranges all around. The Dow did just barely go positive. It's up about 7 points. NASDAQ is up the biggest today. It's up 14 points, and the S&P is slightly down at this point. So kind of a non-eventful day, but I'm happy to announce that on my end here today it is green. So we'll knock on wood, because we don't know if that will be the case at the end of the day, but we shall see. So anyway, all right. So hey, Scott Montgomery. Good to see you, Scott. Thanks for coming by. I appreciate it. All right, so the plan for today, as always, is first of all, we're going to go ahead, we're going to run the U.S. legal disclaimer. We're going to come back after that. We're going to take a look at my current positions, when I bought them and why I bought them, and more importantly now, how I'm going to manage them going forward. After that, we're going to do just a few minutes on some trader psychology stuff, because as you know, I believe it's the most important part of trading. Setups are important, technicals are important, but it's pretty black and white. After that, it depends on you as a person and how you deal with the emotions of trading on whether or not you are going to be a long-term profitable trader. And then after that, we're going to go through my watch list. We're going to take a look at all the stocks in my watch list, see if there are any potential buys today or sells. We're going to look at all the technicals. We're going to look at support and resistance. We're going to look at moving averages. We're going to look at ATR channels. We're going to look at RSI. We're going to look at MACD. And if something kind of fits the bill and checks the boxes at the end of the day, then I'll go ahead and enter that position at the end of the day. And then while we're on the charts, I'm going to go down through and I'm going to show you some recent trades also, just so you can get an idea of some where we took some trades, win or lose, but see the actual setups. And then when the market is closed, if you have any questions whatsoever about anything I spoke about today, please just let me know. Just don't be shy, type them into the chat, and I'll do my best to answer them for you. So all right, well, that's the plan for today. And so I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. So please hang tight. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks for sticking with me through that. So let's go ahead and look at our first position of the day, AGQ. This is our silver position. We did buy silver back here on the 10th of July, and the reason that we bought it is based upon a profitable long-term back-tested approach to trading silver. This is AGQ. This is the double leverage. And that trigger is when the 5-day EMA crosses over the 20-day EMA. So this is a robot trade. This is a mechanical trade. As long as the price stays, as long as the 5-day stays above the 20-day moving average, exponential moving average, I'm going to continue to keep my position. As it moves up, I will phase out, because as you know, I do phase out every day when the market gives me a certain amount of movement. So as long as the price, or as long as the 5 stays above the 20-day EMA, I will continue to stay in this trade. I'll phase out as long as it keeps above and keeps going up. But when the 5-day does eventually close back under the 20, if I still have some shares left, I will go ahead and just exit this trade. You can see it's been a nice trade. When we entered back on the 10th, it immediately went against us, just immediately. But then Friday, it moved back our way, and today we are now nicely in the profit on this trade, and we did hit one profit target here. So I'm kind of eyeing this second profit target here. Excuse me. Don't know if it's going to get there or not, but we shall see. So that's the plan with silver. Phase out as long as the 5 and the 20 the 5 stays above the 20, and until I'm out of shares, or the 5 closes back below the 20. So like I said, this is good back-tested approach. It does have an edge, and it's important in trading that you know that you have some kind of edge, whether that edge is a back-tested moving average crossover system, or holding overnight. We talk about that, or a close. I mean, with this closing above the 200 today, this is extra good too, because now we're going to have some support, most likely at the 200. Not for sure, but most likely. All right, our second position is Boeing. So I did buy Boeing on Friday when we had this close above the 200-day moving average. I bought it on July 12th with this strong close above the 200-day moving average. Now, I only took a half a position because the prices, prior to this, we made a lower low. And so I don't like taking lower low entries with the full position. I like taking a half position. So again, it immediately gapped down against us. You can see it's holding right at the 200-day moving average. The 200-day is 361.77. We're currently at 361.72. So it is right there on the bubble. If it closes under 361.77, I'll just go ahead, take a small loss, be happy that I only took a half a position. Now, if it closes back above the 200-day, we'll just have to see what happens, but I may enter my second half of the position, because again, I entered half position here. My plan was, if it tests the halfway mark of the big bar here, if it tests it intraday and then closes back above, I may add my second position. So it's going to be a fine line whether or not I add a second position or I get out of the entire position as well. So what I did like about this bar is this big, we have a big strong bar, and then halfway of big bar should hold as some Fibonacci support, the 50% mark, but that 50% mark lines up also with the 200-day. So that's why I really like it. So I'll have to watch this one at the end of the day. Most likely, if it closes back above the 200, I'll go ahead and just add my second position. And then going forward, even a penny close below the 200 going forward, I will get out of the trade. But if I do add my second position here, of course, it lowers my cost basis. And again, you don't want to double down on losers. You don't want to take a full position and then it goes down and take another full position. That's averaging down on losers. But this was part of my plan, only taking a half position here. And if it tests and closes above the 200, add this second half. So we'll see what happens. All right, IWM. This is another trade that I took. This is a mechanical trade, like a robot. This is another mechanical trade that I took when the 10 SMA cross back above the 50 SMA. This is a very good back-tested approach to trading the Russell 2000, which is the IWM. Of course, it doesn't always work, but what you'll see is if you're wrong, you'll have small losses. If you're right, you'll have big wins. And that's the key to trading, right? Is having big wins, small wins, scratch trade, but only small losses. That's the formula for being a profitable trader. So we did buy it back here when we had the 1050 cross back on June 28th. It immediately bounced our way. We hit 2 profit targets, about 25% of the position we took off right up here, which was nice. And ever since then, it's been going sideways. We did hit a profit target here. We did hit a profit target here. So I'm out of about 50% of this position, close to break even though the price right now is below my entry. And the reason why I'm break even while this is negative is because I phase out. That's why I'm such a big fan of phasing out when the market gives it to you. But this is a mechanical trade. So, if the price keeps moving up, I will phase out until I'm out of shares, or the 10 crosses back below the 50. That will be my stop loss. And I like to combine different trading approaches. I like to have discretionary trades where I have the ability to get out, get in, if I don't like what the price action's doing. But sometimes discretionary traders get left behind because the market will go into this big long uptrend. It might have a move down that would get you out as a discretionary move, and then it just keeps going back up. So that's why I like to vary my trading approaches for that exact reason. Some discretionary, some mechanical. I like to sell some put options, and then of course we have the S&P trade. So I like to vary it so I'm covered, and it kind of smooths things out. So anyway, is down today. No profit targets hit today, but again, if the 10 crosses back under the 50, that will be my exit. Or if it keeps going my way, I'll phase out until I'm out of shares. So hope that makes sense. Hey, Dr. Jorgensen, good to see you, my friend. Would you increase your position in silver as moved above the 200 moving average so that it's another buy signal? You could, if you were, kind of adding on positions as it goes in your favor. And there are certainly people that do that, but I'm not going to do that just because I took a full position on that silver trade. And so I'm just going to let it play out. I don't want to get in and fiddle with it because that wasn't my plan initially getting into the trade. It's important that you have a plan getting into a trade and then don't deviate. If you have a new position and your plan is to add to it, then I guess by all means, right? But as it is right now, that wasn't my plan. So no, I'm not going to, but it is a full position, which is good, right? All right. Andy, hey Andy, good to see you. Thanks for stopping by. William, if you have time thoughts on CGC as a counter trend trade. Okay, how much time we have? I think we're okay. Yeah, well, that's interesting, William. Good eye on that. You have a couple things going here. You have a V1. Yep, today washed out yesterday's low, reversed back up. You were under 30 RSI today at one point. Now you're back over 30. Those are both positive events the way I trade because we tested the low down here. We rejected the 30 RSI, closed back up. I don't think I'm going to take this one. And I guess the reason why is if it closed back up into the channel, this third ATR channel, I feel a lot better about it. But as you can see, it has already found resistance at the third ATR channel. But the good thing about this particular trade is it does set up for a good risk to reward ratio, because right now you're at a 30.65. Tomorrow, if it closes under 30, you're risking a very small amount, and the market has already told you it didn't like the prices down here. So it's not bad. And and your reward, who knows, you might go all the way back up to here. So you have a small loss and you have the potential for a big gain. So yeah, I mean, that looks fine. I mean, again, we have a V1 and we went under 30, over 30. So anyway, good eye on that, William. Let me know what you do with that. Hi, Frederick. Good to see you. Hope you had a good mountain bike ride or mountain bike trip, because I know you went out of town. All right, so what else do we have? We have Philip Morris. All right, so I did buy Philip Morris back here on the 10th of July when we had two signals. We had a close under the 200, close back over the 200, which is positive. We came from a lower higher low, which is also positive, because the people that bought here probably sold here. That moved it back down, but then it was still strong to go up. So the people that bought here that sold here, now all these sellers are out of the equation. It makes for easier movement. And then on top of just, the higher low close back above the 200, we had this V2. Day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1's close and the 200. So as you can see, this has been a nice trade for us. It is extended away from our entry a fair amount. Probably how I'm going to manage Philip Morris going forward today is, if we close below yesterday's low, and this is this red line here, the 81.43, if we close below here today, if we closed right here, right now, I'm going to go ahead and just lock in the profits. It was a full position. It was a nice 3-day move. We do have earnings coming up, and who knows, I might get out and I might just go right back up. But you just can't worry about that stuff. I mean, just don't even burn calories on that. And then in addition, we have a bearish engulfing candle, meaning that we were higher than the previous high and we're lower than the previous low, which is also a bearish signal. So if it does close under yesterday's low of 81.43, I'm going to go ahead, just ring the cash register on this one and lock in the rest of the profits that I had. But this has been a good trade. Okay, SPY. So as most of you know, I do buy the SPY each day at the close and I sell it first thing in the morning. I bought it yesterday or Friday at 365 and I sold it this morning right at the top at 301.12. Now, in case we have some new viewers, I want to go through this quickly. But if this is a study done from 1993 from @BespokeInvest on Twitter. But if you would have bought the SPY since 1993 at the open, first thing in the morning, and then sold it at the close every day, you would have actually returned a negative 13.9% return. And we know the S&P has gone up, obviously, since 1993. So how is that possible? Well, it's possible because if you would have done the opposite and you would have bought at the close of the day each day and sold it in the morning, first thing, from 1993, you've actually had a 634.2% return. So what's happening is people are buying it and bidding it up in the aftermarket and the pre-market, selling it first thing in the morning. So all of the return from the SPY since 1993 has come in the after hour and the pre-market, and then it gets sold into when the market opens. So that is, it's very good information to have. That is why I always buy it at the end of the day, sell it in the morning. You can see the charts. This orange line down here, this is the buy in the morning, sell in the afternoon. Hardly any movement. The blue line is the buy in the afternoon, sell in the morning. Lots of upward movement. So it's good information to have. It's good data. So that is why I buy the SPY each day in the afternoon, sell it in the morning. I take a 10% position size. I don't want to take too large of a position size because it does have drawdowns. It has multi-year drawdowns that you might have to go through. So, you want to play this for the long term. You don't want to, throw all your eggs in one basket, because any day It could be up or down, but just let the data work for you, the long-term data, that, this does work in the long run. At least it has up to this point, right? So anyway, it was a good trade. We've 1, 2, 3, 4. We've had 4 nice profitable days in the row using this. I am going to go ahead and buy this again at the close of the market. All right, Verizon. So I did buy Verizon on Friday here on the 12th of July. And why did I buy it? Well, we had this move up. We came crashing back down. We did move back over the moving averages, come back down. But the main reason I bought it, you see this little triangle here? This triangle will paint when the previous bar, see this previous bar's high? So we went from under the 100 back over the 100. The next day went way above it and then closed below the previous day's high. That is very bearish. This is a V1, right? Day 1, day 2 washes out day 1 and it closed below. This is quite bearish, but this will paint when, if the next day is and it has to be the very next day, goes again back over this previous high. These are called fake out bars. I learned this from Larry Williams. So this is why I bought this. I did like that it rejected this underneath me, and then I do like that it was strong enough to go back up strongly after the previous day, looked so bearish. So I did buy it here Friday, 57.19. You can see it's had a nice move for us today so far. I have taken a profit target, about 12% profit target already. My initial profit target up here is the 70 RSI, and then this here, this orange line's 59.96. That's the previous high. You can see back on the weekly. So if it keeps moving up, great. But if we do test this line and then fail below it, that'll be a red flag to me, and I'll probably go ahead and lock in profits. But if it tests the third ATR channel and closes below, I'll probably go ahead and lock in profits. If it moves up another day and we close below the previous day's low, I'll also go ahead and lock in profits. So, you have your initial profit target, but you have to look and see, are there any red flags on the way up to that profit target? So hope that makes sense. Dr. Jorgensen, SPY must always win. Don't say that. Don't jinx it. Don't jinx it. Hey, JT, good to see you. Group is growing. A lot more folks watching this week compared to last week. Yeah, I've noticed that. And, thanks to you guys, I do appreciate it. I really, really do appreciate it. The reason I started this channel is I really wanted to help people. There's a lot of people that have a problem with trading and they don't use good trading principles, and they're not that hard, right? It just takes repetition. So hopefully this channel is helping them. Okay. So those are all of our positions. We are having a green day today, which I'm thankful for. Oh, sorry. We got one more. We got one more on Merck. So I sold some puts on Merck. I do like to look at, when I pick a strike price to sell a put, I do like to look at the price in 3 time frames to see whether or not, like for example, I sold Merck down to the $75 level. So when I go on the monthly and the weekly and the daily, I want to make sure that there are some support levels, technical support levels on all 3 time frames based upon that price. So here's Merck on the monthly. So this one's not exact, but you do have the 1 ATR channel beneath the price. So, starting in this area, you potentially could have some support. It's not perfect, but the weekly's better. I wrote this when I wrote it back here. The $75 level lined up right with the 50-week moving average, which should also act as some support. And then on the daily, the $75 level has some support of the 250-day below it. Should have some support at the 6 ATR channel, and also would be a 30 near the 30 RSI range. So that is why I sold the puts on Merck. As long as the price does not get down here below $75 by July 26th, I will get to keep all of the premium that I sold. Currently right now, even though I just wrote it, when did, yeah, it was Friday. I already have about 50% of the premium. So, if I get up to 80% of the premium, even if that happens tomorrow, I'll go ahead and then I won't have to wait 2 weeks. So even though I write longer expiration dates, usually I don't have to wait for those, and I'll take some of my profit and then just find something that has a little bit more meat on the bone. So, all right. All right. So I did want to read this to you. This is from Dr. Anirudh Sethi, PhD. Apologize if I didn't, if I butchered that name. At LAMANIRUDHSETHI. He has some really good posts about trading psychology, trading. So I did want to share this with you, but I do recommend going to this channel. He has good daily stuff. But here he says, I have 2 basic rules about winning in trading as well as in life. If you don't bet, you can't win. If you lose all your chips, you can't bet. And this is from Larry Height, a very well-known trader featured in Market Wizards. There's a lesson here if you really think about what Larry is saying. Again, I have 2 basic rules about winning in trading as well as in life. If you don't bet, you cannot win. If you lose all your chips, you cannot bet. So in other words, if you blow up your account, you cannot win because you're not able to bet. And you've heard me say before, in order to get good at trading, you have to have capital, right? In order to have capital, you can't blow up your account. And in order to not blow up your account, you have to position size correctly. So what I'm really trying to tie this back to is position size. If you're just starting out, you need experience, right? And the only way you're going to experience is getting into trading, but you're not going to get that experience if you blow up your account. So, look at trading as a long-term lifetime endeavor. Position size properly. Don't get frustrated and put on too large of a position, because I guarantee you, maybe 80% of the time it's going to come through for you, but that 15% is going to wipe you out. And then you're not in the game. You don't have any chips, you can't play, and you're not going to get better. So, look at each trade as like 1 in 1,000 of 1,000 trades. Don't get too excited about it. Don't put too much energy in it. I mean, think about a casino. Do you think they stress about every little hand of blackjack? Of course not. They're going to go through losing streaks. Not very many, but they will go through losing streaks, right? But they know that they have an edge in trading. So they always look at the long term. So again, I have 2 basic rules about winning in trading as well as in life. If you don't bet, you cannot win. If you lose all the chips, you can't bet. So please, everybody, position size correctly. Make this a long-term endeavor, right? And stay in the game. And again, this is at LAMANIRUDHSETHI, Dr. Andrew Sethi, PhD. But I recommend his channel. All right, I did want to share that with you. All right, let's get on to seeing what's happening today. All right, so here's Apple. Apple's having a nice day today. Nothing interesting for me on Apple here. We are, we're just a little too close to the third ATR channel. Most, about 90% of prices stay underneath the third ATR channel, over the third ATR channel. So when the negative third ATR channel. So whenever we start getting up into these areas, I get a little fearful of wanting to take profits there. I'm sorry, enter a position there. I mean, it might just go on up here, but it doesn't happen most of the time, right? The tendency is that it stalls out when it gets up here. So, I'm not going to enter here because I don't feel like my reward is worth any kind of risk. So nothing on Apple, but in case anybody has Apple, I'm glad it's going well for you. All right, here is AGQ. We talked about that. Hey, we're closing in on that second profit target. And again, we took that with the 520 EMA cross. So that one's working out nicely. Advanced micro devices. All right, well, here we are. Looks like we may close above the third ATR channel, which is very positive. If you can, you can see here it tested it, failed, but now closing above. That's very, very positive. But it's a 68.71 RSI, so there's really no entry position. I need a pullback on this to, afford me a better risk to reward ratio. Amazon is up nicely today. You can see it tested the third ATR channel below it, so that is positive. So nothing on Amazon today. It's just too high for me, but in case any of you do have Amazon, I'm glad that's moving up for you today. All right, here's Boeing. Well, it's back over the 200-day. It's back over the 200-day. So, I may consider adding my second half of position there on Boeing if it's able to close back over. So let me just write that down. All right, so we'll have to watch that one at the end of the day. Alibaba having a really strong day today. I was waiting for the 5 to cross under the 20 and then back over, similar to our silver trade, but it did not do that, so I didn't have an entry on the position. But this is having a monster day, but nothing there for me today. Caterpillar having another big day. You guys remember I was talking about we were over the third ATR channel, coming back into value. This is exactly what I wanted it to do, but I needed a trigger. I needed a V1, V2 trigger, and I never got it. So it took off without me, but that's okay. DDM looks like it's going to close back above the third ATR channel. It's very, very, very strong. Not a lot of volume though. We're going up and up and up on lower and lower and lower volume. That is generally not bullish, but nonetheless, I certainly wouldn't be buying up there just because the risk to reward's not good. We did buy back here when things were a lot more balanced and neutral. We had the previous day back here, we closed under the 200. Next day we closed over the 200. That was my entry. Right? If it had closed back under the 200, I would have gone ahead and just gotten out. But as you can see, this was a great trade for us. We exited up here. We phased out, moved sideways for a week, phased out, got out right about here. But again, it's about risk to reward. It's about keeping those losses small. And then if you get a winner, having the guts to hold on to it, right? It's very, very important, but nothing there today. Walt Disney, it's a 68 RSI. Again, the risk to reward is not good at these elevated levels for me. I want to see it pull back into the value zone. I feel most comfortable buying there like we did back here on the 3rd of June. Here we have a V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. So we had a nice V2 entry, rejected the 1 ATR channel, happened in the value zone, and you can see we rode it all the way up to here, phased all the way out to about here. So really nice trade, but that's what I'm looking for going into the future with Walt Disney, but nothing there today. All right, so Etsy, we talked about moving average crossovers. Well, today it looks like we have one. We have a 1050 SMA simple moving average crossover where the 10 is crossing over the 50. So let me just show you quickly. This is on etfreplay.com and I'm using this by permission, but we don't just take it because one moving average crosses over the other. We have to look and see, was it profitable in the past? And as you can see, here's the 50-day 10, 50. When the 10 crosses over the 50, you enter. When it crosses under, you exit. And you can see using this approach since, well, yeah, this is since 16 because it's newer, but you can see using this approach with the 1050, the return was 281.5%. compared to buy and hold was only 230.3. So it did outperform buy and hold. But more importantly, look at the drawdown. The drawdown on this was only 36.6%, where the drawdown on buy and hold was 78.8. So it beats in both metrics. The return's higher and the loss is about half of what the buy and hold was. So, it's important to be able to back test stuff so that you have, at least you have an educated guess that this worked well in the past. So I will be buying Etsy today because it looks like the 10 is going to cross over the 50. So I will be buying this today. This will be a full position. It's going to be discretionary trade, meaning that I'm not just going to hold it until the 10 crosses back under the 50 because this is a stock and it's going to have earnings and I don't hold through earnings. But I am going to be pretty patient with it because we are smack dab in the middle of the value zone, and that's exactly where I like to take trades. So I hope that makes sense, but I will be buying a full position on Etsy today. Facebook, just up at these high elevated levels. There's really nothing for me to buy up there. 5 below, having a big down day today. Yep, it didn't like that one ATR channel in the 50. It just that was it for it. So, going forward, if we can move sideways for a while, maybe close below the 200, close back above, have a higher low, close back above the 200. That might be interesting. Or even maybe down here off of the 250 where the RSI is going to be closer to 30, but nothing on that today. Gold, look at this little pennant that it's forming, inside bar, inside bar, inside bar of all this bar. So this is, extreme consolidation, moving sideways. Each day the bar is narrower than the next. This is, eventually this one's going to break out. It's going to break out probably pretty strong one way or the other. I don't know which way that's going to be, but we'll have to watch this. But there is nothing there for me today. Here's an example of a trade we took. Just like with silver, right? With the 520 crossover, we took the 520 EMA crossover back here in the value zone, just like I was showing you on Etsy. That's right where I like it. Took out this fractal. So we had a lot of convergences. We had a lot of combinations of signals here. Fractal, 520 cross in the value zone. And we had a really nice trade from here right up to about here. I can't remember now, it was a while ago, but I know we got almost all of this, phased out, but it was a great trade. But nothing on gold today. Google having a nice day today. Actually did buy it here on a 1030 cross. I exited here for a small profit when it rejected the 200 day. I got back in right here with a strong close above the 200 and it immediately went back against me. So I did have to take that loss. Here it went above the 200 but closed below, so I didn't take it, but then it closed back above the 200 again. I gave up on it at that point, but it has moved up nicely from there. So any of you have Google, glad to see that's moving nicely for you. Goldman Sachs, not particularly bullish today, especially being that we were above the third ATR channel, closed below the third ATR channel. We have a V2 here, see? Here's day 1, day 2, day 3. Day 2 closes above day 2. Day 3 looks like it's going to close below day 1's close. And in addition to that, it's closing back in the channel. Now, this is not a legitimate V2 because day 1, the bar is larger than 1 ATR. So I'm not going to mess with that at all today. But just wanted to point out that is somewhat bearish. I'm not going to short that. We did buy this back here on the 27th of June when we had this nice close under, close back over the 200, giving us a really small loss if we were wrong. In addition, we triggered this fractal. Here's a high, 2 lower highs to the left, 2 lower highs to the right. We did enter here, phased out, phased out, phased out. And then it rejected the 70, came back down. So this was a beautiful 2-day trade for about 3%, but nothing today. IBB, nothing really there. Nothing really there that I can see at all today. Intel, Well, had that close above the 200-day moving average. I did not take that because of the big bar in the recent past. I didn't take it. Obviously would have been a good trade. So any of you have Intel, fantastic. We are getting up here the third ATR channel and the 100-day, so there's probably a good chance, you might have some resistance up here. I imagine the rubber band's getting pulled pretty tight. Usually it does get pretty tight when you start getting up to the third ATR channel, but nothing on Intel today. The Russell we talked about, we bought this with the 1050 crossover back over here. It's just was up and moving sideways and all around. But this is a mechanical trade, so I'll hold this as long as the 10 stays over the 50. Johnson & Johnson had that huge down day on Friday. Not surprised that today's bar came to halfway of this bar and it got rejected. Earnings looks like earnings are tomorrow, so definitely nothing on Johnson & Johnson. Coca-Cola, I was looking at Coca-Cola as a possible short today, but it doesn't look like it's going to trigger. And the reason why, I learned this from Dr. Alexander Elder. I studied one-on-one with him, but he really likes to trade double bottoms with bullish divergences and double, triple tops with bear divergences. But here we have a high. We have strong readings on the MACD showing strong momentum. We come back down. We make a higher high. And here we have lower readings. We go back down, we make a higher high. Now we have no green readings, right? And so, it's showing that it's running out of momentum there. And today, you see how we did not make a higher high. Well, Friday, we've made a lower high. Well, a lower high is what you want to look at if you want to start shorting, especially if you have a double top or triple top behind you with less and less momentum. If this closed under 152.04 today, I would consider shorting that a half position because of this setup. Because 52.04 would be a V2 to the downside. Remember, just because something looks good possibly to buy or sell, you need some kind of trigger to get in. Well, that would be my trigger if it closed below 152.04. So right now it is not, so I would not do anything with this trade. But if it does close below there, I'm certainly going to consider taking a short on this, but only a half position because it's a counter trend trade. So we'll have to watch that. Lockheed Martin, it stopped going up. It's kind of moving sideways. If you watch this channel a lot, you'll see we've made a higher high. I'm looking for this to come back into the value zone so I can possibly initiate another long trade if I get a signal. And again, just like this, we had this beautiful signal back here on May 29th. Happened in the value zone. We went higher, came into the value zone, look for that V1, V2 entry in the value zone. This is where it happened. Here's day one, day two, washes out day one, closes above. That was our entry, and we wrote it and phased out all the way up to here. So that was a really good trade. So that is why, be patient. Let the trade come to you. Don't try to front run the trade. MasterCard, well, very strong, closed above the third ATR channel. It's parabolic. It's closing above 70 RSI, so I don't want to get involved with this either to the upside or the downside. We did actually short MasterCard back here on June 10th when we went above the third ATR channel, under the third ATR channel, above the 70 RSI, under the 70 RSI. We had this really nice short trade down here, but once it started getting back into the value zone, I started thinking about going long, and then we had this nice V2 signal. Day one, day two, day three, day two, washes out day one, day three, closes above day one, immediately went our way. We got out of about 50% of our position here, and then it puked on us, but it was still a nice profitable trade. I was looking for another V1, V2, but never came. So anyway, still a couple really good back-to-back trades on MasterCard, but nothing today. Merck, we talked about that. Sold the put down to 75. So as long as this baby stays above 75, by July 26, we keep the entire premium. You can see this is forming a V2 today, right? Here's day 1, day 2, day 3, day 2 washes out day 1, day 3 looks pretty close to closing above day 1. And in addition, we washed out the third ATR channel and the 100. So, I'm not going to take a regular initial, I'm not going to initiate a long position on that, but just did want to point that out. Problem with this though is that you have this bar on day 1, which is much larger than 1 ATR. It's like 2.5 ATRs. So nothing on Merck today other than the put. Microsoft, nothing there. Netflix has earnings in a few days, did come back down into the value zone, did bounce at the 100 day. This big bar concerns me though, so I'm not going to do anything with Netflix. Nike has just been super, super, super strong. It's been tagging that third ATR channel here, tagged it again today. So nothing on Nike. Philip Morris we have. My trailing stop here is a close below Friday's low, so 81.43. So right now it's 81.35. So if it does close under 81.43, I'm going to go ahead and just lock in that profit and call that a nice 2-day trade. PayPal 66 RSI, it's up at the second ATR channel. It's just too high for me to do anything with. Here's this previous high, which acted as resistance, but now it is acting as support. So that is strong. Doesn't mean I'm going to buy it, but I want to see this come back into value. Like here, we did buy PayPal here when we made a higher high. We came back down into value. We had a legitimate V2 entry, day 1, day 2, day 3. Day 2 closed under day 1. Day 3 closed over day 3, closed over day 1, and we had this really, really nice trade up here. Remember, the easiest movements are from inside this channel up to the third ATR channel, inside this channel down to the third ATR channel. And the further you get away from the midline of this the middle of this channel, the more the rubber band stretches. So that's why I like to take the majority of my entries inside this channel. But that was a really nice trade. We phased out to, I think here or here, I can't remember. But anyway, it was like about a week trade, maybe a little longer than a week trade. It was over 3.5%, so it was a great trade, but nothing there today. The Qs, again, just this strong market just does not leave a lot of entry potentials here, but don't get frustrated. Don't get impulsive. Wait for something to come back. Wait for something to come back into the value zone, or maybe test the third ATR channel or test the 50. We did buy the Qs back here because it offered us a good risk to reward. Previously, we're under the 200 day, and then we closed back above the 200 day. We were under the third ATR channel. We closed above the third ATR channel. Just like with Boeing, if I'm wrong really small. Just to close below the 200, I'm out, and that's it. But if I'm right, then you have to be patient and let this thing work for you. And that's exactly what happened. We bought here, we phased out, moved sideways, phased out, moved down sideways, and then we got out of the entire position here. But this was a monster trade. I didn't know it was going to go that far, but what I did know is that I had a signal. If it closed below, I was going to be wrong small. If it went my way, I had the potential of being right big, and that's exactly what happened. S&P, we know about the S&P. We will be buying that again today, but that was a nice overnight profit. Square has just been on a tear. Mount Doji, do you have... No, you had Twitter. Man, I don't know why I always mess those up. Sorry, never mind. Never mind. Okay, so we had this big move up. We're way too high to do anything with here. We're 76.47, meaning that we've gone parabolic. I just don't want to get involved there. Again, a pullback down into value to the 200, that would be sweet. We did enter, I was talking about bullish divergences, bearish divergences early. We had a great trade, one of our best trades of the year, when we had this low, we had a rally, we came down, we made a lower low. You can see the MACD readings here are very shallow compared to the MACD readings over here, very deep. what that is showing is that you're running out of momentum to the downside on that second attempt down here. So we made a lower low, even though this is more shallow than here. That's a bullish area, but then you need a setup. Well, what was our setup? Here's our V2. Day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1, and we also close back into the channel. So we rode this from here right up to about here. It was a 14% trade. So really good trade, but again, nothing here. Don't get impulsive. Don't get frustrated and try to buy stuff up here, because the risk to reward ratio really doesn't work out very well. SSO, that's the S&P. What do I have? 10 minutes? Okay. Again, up near this third ATR channel, it just does not provide a good risk to reward. Here's an example where we went under the third ATR channel, back over. Under the 30 RSI, back over. Just like William was showing me on that trade a little while ago, same situation. Under, under, back over, under, back over. If I'm wrong, I'm probably wrong to about here. But look at this trade, right? We phased out all the way up here. So I had this kind of potential risk and this kind of potential reward. So similar to CGC. But the only thing was the one I just showed you went back over the third ATR channel. This one went did create a V1, did go under the 30, back over. That's all good, but ideally I'd like to see this back over the third ATR channel, because that's acting as resistance right now. Hey Steve Burns here. Hey, thanks my friend for coming by. It's always an honor to have you. Steve says new traders need to understand there is no trading system that wins every time, like there is no one-sided coin. The key is to win a lot more when you land on heads than you lose when you land on tails. Yep. As always, Steve has such good advice. Totally true. It's about managing risk. Try to get your head around, my job is to manage risk. It's not to trade stocks. I know it's semantics, but it has helped me just be real stickler on not letting those losses grow. Remember the flower bed analogy. Keep those weeds out of your flower bed. Let your flowers and your vegetables and all that stuff grow nicely, but don't let those weeds grow. That's what's gonna hurt your account. TLT, nothing really here today. Tesla, big strong day, 72 RSI, closed above, looks like it's going to close above the third ATR channel. That's fantastic, but it doesn't allow for a good risk to reward ratio for me at these levels. But in case anybody has Tesla, hope that keeps motoring up. Twitter. Well, Twitter kind of had this bull flag here and then broke out of it. Did get rejected at the third ATR channel, so nothing really here on Twitter today. Big strong move. Again, when you have big up moves, I want a pullback. I want to try to buy those pullbacks. Natural gas, nothing there. Oil, having a bit of a tough day today, nothing there. The dollar was higher. It is moving back into the value zone. If this could keep moving sidewards and have a spike down reversal, that might be an entry, but nothing today. VIX, I did buy VIX back here when we went under the third, under the 30, back over. Did get out of about 30% of my position here. My stop was a close under the 30, so I had to ride it down to here. I did have to exit that on Friday for a loss, but it was only a quarter position. Thankfully, VIX moves strongly. There's a lot of volatility. And it kind of, they have outsized moves compared to the rest of the market. That's why I only took a quarter, but yeah, this was a loss. So, if it closes back above the 30 RSI, I might be interested, but I'd really like to see it close back above the 30 RSI and back above the channel. It's working on a V1 right here, but nothing on that today. Verizon, we talked about that. I bought that with this fake out signal right here on Friday. Did move nicely. Oh, just hit our second profit target on silver. Sweet. Energy sector looks like it rejected the 200-day, so nothing there. But if it goes back over again, it's possible. Financials, no. Real estate, back in the value zone. This could be setting up. I need a V1, V2. Utilities, healthcare, and pharmaceuticals. So, all right. So it looks like we did just hit another profit target on AGQ. Yes, we did. So that's pretty sweet. That's our double leverage. That's up 2.2% today. That's pretty nice. So we did hit us another profit target there. All right. So we got 5 minutes. So I'm going to have to get to work here. AGQ, we know we're good with that, so there's nothing to do with AGQ. Oh, sorry. Sorry, I have to do something. 240. I trade this other account, so I'm going to be running up against time here. Dang it.
Order filled.
All right, that's taken care of. Okay, Boeing. It's right on. It's right on the bubble. It is literally right on the bubble. So I may add another half position to that. IWM is fine. Philip Morris, that's going to be close. So I already have an order into buy SPY at the end of the day. Verizon is fine. I have an order into buy Etsy at the end of the day because of the 1050 crossover. Yeah, so that one will trigger automatically. So I'm really, dang it, I'm really going to have to watch these closely. Sorry, everybody. I know it's a bit discombobulated, but there's a lot of little things going on here. $361.77 is just right there. Philip Morris, 81.43. So I am going to go ahead and concentrate on that trade right here because I already do have Boeing. Thank goodness for these market on close orders, otherwise I'd never be able to do this. All right, 81.43. Boeing looks like it's below. All right, well, I'm just going to have to make a decision here and just assume that one's going to close below.
Order partially filled. Order filled.
Close below.
Order partially filled.
All right, so I sold to Philip Morris.
Order
I could be wrong on this, but that's how it goes because I don't have enough time to do them all because they're so close. And now I've got to queue up Boeing because Boeing looks like it might not close under. All right, so Philip Morris is gone. It may close back over there. That's, oh well. What do we have? We have 1 minute left. $361.76. So right now it is under. So if this does close under, I'm going to go ahead and I'm just going to take that loss. 30 seconds. $361.76 is the key. And so we're under. All right, I'm just going to have to make the
Order
decision
filled.
and sell it.
Order filled.
All right.
Order
cancelled.
cancelled.
So,
Order filled.
Philip Morris. It closed
Order
back
cancelled.
above. But that's how it goes sometimes, you know, you get those last minute things. So I guess technically I should have held this, but I didn't have the option. But anyway, we locked in a profit on that. That's good. It was, it's frustrating. It's frustrating, but it happens. But anyway, it was a nice profit on Philip Morris. Boeing did close beneath the 200, so we were correct on that one. So I did exit that. We got into Etsy at 65.65, full position. Based upon the 1050 crossover, so that's a good back tested system. We'll see how that works. The SPY 300.75 is where our overnight SPY trade is. All right, there we go. Not too bad, not too bad.
Order cancelled.
All right. All right. So listen, if anybody has any questions, you know, please go ahead and type them into the chat. I'm happy to answer them for you. So don't be shy. But before I get into the answer portion, I do want to let you know that I do offer private one-on-one coaching and teaching and mentoring lessons in the evening time via Skype. So, you know, I know it will improve your trading. You know, if you book a lesson, I've had really good success with my students. You know, there's a difference between me doing this on the live stream each day compared to working one-on-one with a person, you know, depending on what their financial situation is, what their availability is. So, you know, if you're interested in possibly having a lesson, please reach out to me. My email is in the description of this video. My hourly rates are also in the description in the video. And usually it just starts with a free phone call just to get to know each other a little bit better. I just want to, you know, get some information about you, get an idea about how long you've been trading, what your experience is, what your, you know, your challenges have been and what your goals are. And then I'll create a lesson plan specifically for you and all those variables. So, anyway, and then listen, if you do like this channel, I really would appreciate it if you would subscribe to the channel if you haven't already. And also, you know, give me a thumbs up. I would appreciate that. That really helps with the rankings. It's just that little thumbs up button down there below the video. But it does help Google get the channel out to more people and for us to grow the channel. So, you know, help me help other people with their trading by sharing, hitting the thumbs up button, and, you know, possibly even sharing on your social media or talking to your friends about it. So anyway, enough of that. And let's go ahead. So let me just take a look, see what the final tally was for today. Yeah, it was in the green, so that is good. So it was a nice start to the week to have a profitable week, a profitable day. So, all right, let's take a look and see. JT says group. Oh, I already read that one. Sorry. Hey, Murat, nice to see you. How are things in Norway? Thanks for coming as always. Mount Oji said Etsy looked good to me earlier today as well. Did it? What looked good about it, Mount Oji? Were you aware of the 1050 SMA cross on Etsy? Or was it that we went up, we pulled back into the value zone and held this 50? See, I mean, that's another positive way to look at that as well. Hey, Ramble Ron. Good to see you, Ramble. Clicking on the bell helped the most. Oh, yeah. The bell, too. There's that notification thing. So if you click on that, you'll see notifications, when I go live or schedule something. So, yes, thank you, Ron. Appreciate that. William says, hey, Greg, could you please show me where the 70 RSI will be on eBay? I took a position on Friday based on V1, V2 in the value zone, but the RSI is already 60. Yeah, of course. And the one thing about Trade Navigator, and this is Trade Navigator, that you see me using here, right up here. I've been using this for many, 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 many years. And the thing that I like most about it is that it gives me the ability to say, hey, what is the RSI going to be here tomorrow, either today or tomorrow? And it really helps. So we're at a 63.49 RSI. So for tomorrow, William, let's take a look. I'll just do a new bar and I'll go up. It's a little persnickety, so you have to do it slow. Close enough. 70.02. We'll just call it 70.08 because it was slightly below. So there you go, William. Looks like 41.08 is going to be the 70 RSI tomorrow. What do we have earnings? We have earnings on Wednesday. So yeah, 41.08, William. You might want to write that down or put that on your charts. That's for tomorrow. That's for tomorrow. Murat said it's still daytime, 10 p.m. That means it's still sunny, Murat, at 10 p.m.? Oh man, that would be tough. Actually, I'd like it. I'd like it because I do most of my stuff at nighttime. But I guess getting to sleep, that might be tough. It's great having you here from Norway. It's cool. Mount Doji says the 1050 cross is what I noticed first. Oh, good for you. Look at Mount Doji, man. He's specking in on all the little stuff now. He's learning. He's learning. Proud of you, Mount Doji. William says, awesome. Thanks, Greg. You're certainly welcome. Yeah, and by the way, you guys, if you ever need to know what the RSI is going to be to the upside or the downside the next day, please let me know and I will hook you up. Mount Doji says, I would love to hear your thoughts on CRM. Okay. So you see how we painted the little triangle here, just like we did today on, Friday on Verizon. And again, what that's saying is that you have an up bar, the next day goes higher and then closes lower, essentially creating a V1. It's essentially a rejection of a V1. I never thought of it like that. But here's a V1, not a great one, but this one does go higher than there and rejects. A V1 to the downside is negative, but if it's strong enough to then go back up the next day, take out that high again, that's why it painted the triangle. So that being said, even though that happened, I don't think I would buy here just because the third ATR channel is so close. Mount Doji. Doesn't mean it just can't go roaring up. I mean, this triggering this triangle, this untriggering this V1 essentially, that is strong. 59 RSI, so it's not overbought, but just my preference is that it's, this could go screaming. There's no doubt about it, but just the way my preferred way of filtering my trades is, I theoretically have to look at that third ATR channel and say there's not enough reward compared to my risk. So, but I hope that helps. This could go either way. Murat says, are you also using to pass the order for Trade Navigator? This is the first time I'm seeing this platform. Are you linking to this broker? No, Murat, I use Trade Navigator just as my charting software. Trade Navigator does allow you to trade through the chart also, but I don't trade with Trade Navigator. I just pay for the chart and use the chart. I use Interactive Brokers as my actual broker. So, I'm dealing with this screen on the charting, then I have to go to my other screen to place my orders through Interactive Brokers. And, it's very important, everybody, to use a broker that's good, solid, capable, but charges a low commission. Commissions add up to such a large percentage of your profits. It can be up to 20-25% of your profits. So, there's a lot of good ones out there. I just happen to use Interactive Brokers because, it's about $1 a trade and it's close to 2% interest on your money that's not being used a year. So that's a nice benefit too, right? Murat says, my sentence completely screwed. I meant if you are passing the orders using Trade Navigator. Nope, I'm not. Just using Trade Navigator as my charting, and then I do my orders with Interactive Brokers. 10 p.m. still daytime. Today is cloudy, a bit darker. Okay. Ramble says, can you take a look at LK and STX? Got in them last week. Just wondering where I should be getting out. This is me trying to let my winners run. So hard to hold. Yeah, I know, right? It's a skill. Just look at it as a skill. It changes your perception, Ron. Look at holding on to your winners, as long as there's no red flags, as a skill. I promise it will make a difference. Nice, man. So you got into them last week. So down in here in the value zone, that's good. So, if it were me, let's just quickly look and see where the 70 RSI is going to be tomorrow. So tomorrow on STK, oh goodness. So if I was in this trade, this is how I would look at it, Ramble. I would look at 3 different approaches here. If it just keeps going up, hold it. If it rejects the 70, even intraday, or if it closes above, close back down, tomorrow at 50.58, that is where I would take my profits. However, tomorrow, if we tested this high up here, this previous high, and rejected that, that would also be another red flag. That would also be another reason for me to get out of the trade. So, now thirdly, I don't know where you bought it at, but if you said last week, I'm just going to assume you bought in here somewhere. It looks like it's starting to be profitable, moving away. Maybe not that much, but I would probably use the 5 as my trailing stop. The first hurdle to get through is closing above the previous high here. If it rejected that, I would exit there. Or if it closed above and below the 70, I would exit there. Or if it just kept going up, moved above the 70, I would hold it until it closed back below the 70. So that is STX. And then let's look at LK. That doesn't look right. Holy smokes. Nice. Nice, Ramble. Holy smokes, so it's up 8% today. Do you have this, Ramble? I think he does. Fantastic. Fantastic. I don't have all of my indicators on here because it looks like this just went public, but I can still give you the RSI level. Boy, this is a monster here. Good for you. You win the trade of the day for sure. All right, we'll just call it tomorrow. I mean, that's a pretty tall order to go up there tomorrow, but your 70 RSI tomorrow is going to be at 23.95. And if this were me, this is just me, but you know, if we tested the previous high back here on June 18th and we failed there, that would also, for me anyway, not telling you what to do, but for me, if we tested that and rejected it, that would also be a place for me to get out. Congratulations. $46.29. So right in here, man, that's really great. Yeah, I mean, it's moved away from your entry now. You don't want to give that back. So, you know, being that I know you've bought it down in this area and you've moved it, you know, like 1.5 ATRs away, I would probably get out with the close below the previous day's low. Me personally. Mount Doji says, thanks for the help as always. Good, sir. Good. Glad. I'm glad it's helping. Mount Doji Williams says, what do you tell yourself or think about to help yourself to let your winners run? Or do you stay in your position unless you hit your stops or profit targets? Well, that's the plan. I mean, you know, I'm very strict about saying, okay, this is my plan. If it does this, I'll do that. If it does that, I'll do this. But like I said earlier, you know, if you're having problems holding on to your trades, just remind yourself daily, William, that, you know, the ability to hold on to a trade when it's going your way is a skill. And if you think about it that way, it might change your mind around to where you go like, okay, I have to develop the skill. I have to let this run. Now, I don't mean just let it run and do whatever it wants to do. Let it run as long as it's not having red flags. If it has a red flag, then go ahead. You know, I mean, yes, I have an initial profits target. I have like the 70 RSI, I have an initial stop, right? Like maybe a close below the 200. But it doesn't mean I'm either just going to let it hit my 200 or it's going to hit the 70. It's not just one or the other. Those are my initial stop. That's my initial profit target. That's my initial stop. But as it moves up and starts moving up and starts pulling away from my entry, I'm not going to go, well, I'm just staying in as long as until it hits my profit target or it goes all the way back down. You know, then I have to start trailing it like, you know, a faster moving average like the 5 or a close below the previous day's low. So, but if it's moving up, it's not testing any of your previous day's low, or it's not testing your trailing moving average stops. That's because if it does, yes, then you get out, right? But if it just keeps going up and keeps going up and it hasn't hit your profit target yet, but there's no red flags, then yeah, I'll just hold on to it. And that gets into the mental part of saying, look, this is a skill to be able to do this. I can do this. I can do this. It's very hard. It's very hard to have open profits. I totally understand. So I hope that helps, William. If that wasn't clear, just let me know and I'll try again. IK on 7-Eleven. 7-Eleven. Oh, the date. I was thinking 7-Eleven. All right, we'll try this one more time. Oh, LK. That's my problem. Beautiful trade, Ron. Fantastic, my friend. Look at the volume today. Woo! So now, you know, don't give it all back, right? Start trailing that baby somehow, some way, something, you know, If it were me, I'd be scaling out a little bit, locking in some of that, but that's just me, do what you want. But at the very least, don't let that come all the way back, because what a day, man. Proud of you. Can you also look at CLF? Yes. So, this isn't bad. We made a higher high. We came back down into value. We did have a V2 here. I'm not particularly excited about this V2 because yes, here's day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. But, my rule on the V1s, V2s is that this day 1, whether it's a V1 or a V2, cannot be larger than 1 ATR. And you can see this is the distance from here to here is 1 ATR, from here to here is 1 ATR. So it's a little too big for me to get into it. I mean, it was up today. And the other thing too is this movement back into the value zone basically came straight down. I like to see it move down and then move sideways as long as possible. The longer the better, and then have the V1, V2. So you entered at 940. Oh, wow. I'm not even in the right zip code here. I was looking at the recent activity. So you entered at 940. Woo! Man, it's fantastic. Fantastic. So, I mean, look, if you're in it at 940, I probably would have gotten out. Well, who knows where I would have gotten out, actually. It's hard to say. But right now, just taking it where it is right now, there's a variety of ways. Close under today's low. Maybe you close back under the 20 if you want to really give it some room. Maybe close back under the 200. What are your thoughts, Murat? I mean, what are your thoughts? Have you phased out of anything? Do you have all of it still? Think about that for a minute and let me know, and then I'll get on these other questions. How do you tell the difference between profit taking and rejecting a higher line level, or is there a difference? What do you mean by a higher, H-I-R-E, Ron? How do you tell the difference between profit taking and rejecting a higher level, maybe? I mean, I think I know what you mean. So, yeah, I think I know what you mean. So, okay. So my profit targets, Ron, are determined each day. Like there's a formula that I use, and it's in the description of this video. There's a video about exactly how I do it. But you can see I hit one profit target here. Here was the second one we didn't hit. Here was the third one we didn't hit. These are profit targets, right? This is playing offense. As it goes up, I'm going to get out. Now, see the previous high back here? If we moved up today, hit the second profit target, but then we tested that previous high and then closed back underneath, that would be a red flag, a reason for me to get out of the trade. So it's different. A rejection of a higher level is a red flag. Just think about it. These are profit targets compared to red flags. So if something moves up, I'm going to hit profit targets. If they move up, reject the 70 RSI, come back down, that's a red flag. Yeah. So, you have to look at prior highs, you have to look at RSI levels, you have to look at moving averages above you. And the way I trade is I'll phase out my predetermined levels to phase out. That's the playing offense part. But if I go up to a level above me, like a previous high, 70 RSI, a moving average that I reject above me, or if I'm extended away from the trade and I go down and close below the previous day's low, that's a red flag. So think about profit targets and red flags. And your red flags are 70 RSI, rejections of previous highs, closing lower than the previous day, like I did on Philip Morris, or moving averages above you that get rejected. I keep all of it at the moment. I bought in 3 pieces actually. My average is 3.96. The stock is very much linked to iron ore prices, and iron ore is peaking over and over these days. I will wait until iron ore to stop moving first. Okay. All right. Well, just make. All that I can say is don't let it come all the way back to your entry point. And that's my best advice. I mean, you have a really nice profit on this trade. I mean, so far you're up about 11.84%. Pick some kind of level, pick something that makes sense. But I'd hate to see you lose this, have this go all the way back down. All right, everybody. Well, anyway, grateful to have a green day today. That is nice. And I think our positions move pretty well for us today. So we have AGQ, we have the long silver. I did get out of Boeing with the close under the 200. The IWM, that is just a mechanical trade until the 10 goes below the 50. Philip Morris, I did go ahead and lock that in. Looks like I should not have, but I couldn't gauge it right there till the end of the day because I had those other positions to deal with. SPY, we bought that right there, and then Visa did hit the one profit target today. So, all right, everybody. Well, listen, thanks for coming by today. Thanks for spending your time. I really do appreciate it. I'm just going to bug you one more time and ask you to please hit that thumbs up button if you could. And yeah, share the channel with people. Let's grow this and help a lot of people. And then I just want to leave you off with, go out and do something nice for someone today, human or an animal, just something. It's going to be good for you, and you might make their day. And it's just good stuff, right? And it's free. Just a wave or a smile or a hello, or just be friendly, right? So. Hey, Scott, you're welcome. So Scott, thank you. Ramble, thank you. Murat, thank you very much. We have JT. Thanks. I appreciate it, my friend. I really do appreciate you coming by. William, as always, thank you for coming by. Mount Doji, Steve Burns, always a pleasure, always an honor, Steve, to have you in here. Really, I mean, I can't say it enough. I say it every time. It's because I really do mean it. Frederick, good seeing you. Not sure what you mean by I cashed out €3 today, but that sounds good. It's better than 2. Dr. Jorgensen, good seeing you. And I think that's everybody. I know Andy was in there too. So appreciate everybody coming by. If you have any questions about anything we did today that you didn't put in the chat, feel free to send me a message on Twitter or in my email, and I'm happy to answer them for you. So hope to see you tomorrow during the last hour of the market on Tuesday. All right, let me see. I just want to make sure. Yeah, got everybody. Thanks, Johnny. Appreciate it. All right, have a good day. Take care. Thanks, JT. Take care, everybody. Bye.